Good morning, YouTube. Reseller Mom here, along with my CPA, Julia, here to answer tax questions for end of the year taxes. And let's see here, there we go. Taxes are one of those things that we have to do every year, and it is not necessarily a fun job, but it is a job nonetheless. So we are here to answer any sort of tax questions you have. Leave them in the comments. And if you have something that maybe we don't get to, go ahead and leave them, or you're watching the replay, go ahead and leave them as well as in your in the comments, and we will get to them next time. So we've got a couple of general discussions, and then we've got some questions from Instagram that people asked that we will be getting to. And let me have Julia introduce herself here and talk a little bit about end of the year taxes.
Okay. Hello, everybody. My name is Julia Ibrahim. I'm a CPA, CIA, and I run an accounting and tax firm called All United Accounting and Tax. We specialize in e-commerce, and we help e-commerce sellers to grow their business and to save money on taxes. Just a quick disclaimer, I'm not an attorney, and this is not a legal advice. So make sure to do your research. I'm just answering the questions based on my experience and expertise in the field.
Yes, just like with anybody on YouTube, they are not directly answering your situation, and everybody's situation is going to be a little bit different. So, take what you learn here as a way to learn more, and then go to your CPA or get it answered for your specific question. So we have some, let's see here. We have some questions and things that are pretty popular going on right now. And the first kind of question I see out there is, what reports do you run at this time of year for an e-commerce seller?
Okay, so it of course depends on your particular situation, just like we said. Now, there are two different ways to prepare taxes. You either have the books that are already set up, and then it becomes very straightforward in terms of the reports that you would need. All you need is to pull profit and loss and balance sheet from your software, from your accounting software, and a couple of reports just to reconcile from your marketplaces. If you don't have the books, then it becomes more complex, of course. You would need to rely on those reports from marketplaces and rely on your credit card statements and all that to pull together all the data for your taxes. So in terms of running the reports from your marketplaces to get all the sales and fees data that you need, if you're selling on Amazon, for example, you can pull Amazon summary report that would have all the information, and it will need to be reconciled to your 1099-K if you receive one from Amazon. That is also available online, so you won't be receiving that in the mail anymore. Even last year, they've been just putting it online for you, so it's up to you to download it or to check if it's there or not. And for other marketplaces, it's similar, but you would need to run various sales reports to just get all the sales data. Make sure that you are pulling the gross sales and not the payouts that actually landed in your bank. So that's the most important part. And for inventory, depends on how you're tracking your inventory. You would need the year-end inventory, your inventory level at cost to report on your taxes as well. Yeah.
Sounds good. And the second thing here we have is donation write-offs. What are they, and how do you propose tracking them?
Okay, so again, this depends on what software you're using. If you're using any software, for example, if you're using Inventory Lab, Inventory Lab automatically tracks any unsellable goods. If you, for example, sold something and it got returned to you, then unsellable goods would already be written off as cost of goods sold there. So even if you recall those goods to come back to you, those are already written off. If they are marked as sellable on Inventory Lab, then you decide to pull that inventory off Amazon FBA warehouse. Then you have to see how you want to dispose of those. So donations is one of the popular ways to dispose of that. Another way is to resell it. If it's completely unsellable, obviously you just need to get rid of it somehow. So the IRS requirement is that you keep track of all the donations that you make, of any write-offs. So basically, you would need to have at least a spreadsheet of those items that you are disposing of in order to write it off your books and on your taxes. Yeah.
Okay. We have a question from the audience, from William. Good morning, William.
Good morning.
Put that in. We've got, what do you do when your receipt shoebox has turned into a 50-gallon plastic tub?
Okay, that's a great question. So IRS actually does not require you to keep paper receipts. You can keep them in a digital format. Of course, it depends on the type of person. Some people like to keep receipts on paper. Others scan it right away or take a picture of it right away and just store it that way. So either way, you need to store it, right? So I would suggest, if you have too many of those, maybe convert some of the older ones into digital format potentially. But receipts do fade away also, so keep that in mind. So that's why digital is it's a good way to do this, and it doesn't have to be any software specifically. Just even if you just organize it in folders on your desktop, that's sufficient enough, as long as you're comfortable with it to find it. Yeah.
Nice. We have a question about home office deductions, meal and entertainment. So what's going on because I know there's been some law changes on those types of deductions. Like, I went out this weekend shopping with a friend and had a blast, but we had lunch together. Mm-hmm. Can I write that off? What are the rules and regulations around that you suggest or know of or talk about?
So let's talk about the business meals first, right? Mm-hmm. And then the home offices and separate one. Okay, so for business meals, the law temporarily allows you to deduct 100% of your business meals instead of the 50 that used to be the case before. So this is basically because of the COVID-related situation where they want to encourage people to go to the restaurants and make it completely tax deductible for the businesses. Yeah, so that's, if you go and have a business lunch, it's absolutely deductible. So just make sure to keep a receipt and document it somehow, who was attending and what was the purpose of that meeting or purpose of that meal, basically. Were you sourcing during that time, or one of those? You just need to document it either directly on the receipt, or you can keep a separate log of your business meals just to support it. Yeah, so that's basically what IRS would ask for.
I'm going to be eating out more. I don't go out much.
Yeah, but you do for business, right? So that's definitely a good deduction to take. Now, and regarding the home office, you wanted to cover that? Okay.
Yes.
Yeah. So the home office, it depends on your business legal structure, the way that you can write it off, right? So for sole proprietors, single member LLCs, those whose tax returns for business get prepared on their personal tax return, it's pretty straightforward. So it will be part of your tax return. You would be deducting the home office expenses as a percentage of your total square footage. Typically, it's based on square footage. That space for business has to be used exclusively and regularly for business. So make sure that it's a dedicated office space for your business. So the percentage based on square footage of, you would be able to write off the percentage of either mortgage interest if you own a home, or your rent, and then all the utilities, maintenance, repairs on the home. And yeah, so those are the typical expenses, and telephone. Yeah, so that's something that we typically look at. So that's if you're sole proprietor or single member LLC. If you are partnership, for example, or a multi-member LLC, it's going to be a little bit different. It's somewhat similar to single member LLC, but not exactly. So partnership files a separate tax return. And if the partnership did not reimburse you for those home office expenses, you would need to claim those as unreimbursed home office expenses on your personal tax return. So there is an option, and it's going to look very similar to the way you would report your regular, if you're a single member LLC, regular home office deduction. If your S corporation is completely different. So there you would need, in order to deduct those expenses, you would need to be reimbursed by your corporation. And the best structure would be to set up an accountable plan where your business reimburses you regularly for those expenses, and you the business gets to deduct it and you don't get taxed on it. Otherwise, if you do it any other way, most likely it's going to be taxable on your personal taxes if you get reimbursed. So it's quite complicated to, it's I tried to put it in simple words, but it could get complicated in terms of the home office deduction. So make sure to seek advice on this for your tax professional.
Yeah. So I have a question. Sure. I had watched long ago when I started this business on how to kind of calculate your home office and whatnot. And one of the things they suggested was to take masking tape or blue painter's tape and kind of outline the area and take a quick snapshot of it. And then also like write out on a notepad, the dimensions of the room and the dimensions of the pictured area to get the calculation and then go to calculate your bills and stuff. Do you suggest doing that? Do you think that's a good idea, or am I wasting my time? Because I'm getting ready to do that this week. And if I'm wasting my time, I'm wasting my time.
If you get audited, they will ask you how you determine that square footage. So that will be a good solution for you to provide them documentation. Not everybody is doing that. They just estimate. Many times they just estimate, but as part of the IRS audit, typically they would request at least a floor plan for you to show where that space is, so that you can, defend your case. Because typically, if your percentage that you claim is more than IRS considers reasonable, they may flag you for an audit. So that's just one of the things that you need to be aware of. Yeah.
Okay. Well, I mean, I think to me, it makes sense in my head, because then I can just go pull up those pictures and I just stick them in my file. And
yeah, exactly.
It's not great. We have another question from William. What are some good write-offs that are lesser known?
Oh, yes. So there are some write-offs that are less known, but typically any business expense would be a write-off. So most of the time, it just depends on your particular business. If you're starting out and you're growing your business, there are some typical write-offs that we see. I can talk about those, but less known are typically depend on your specific situation. We've seen all kind of write-offs. So, but anytime you have some very shady write-offs, those I typically just at least make you aware of. IRS will also look at this. It's not typical. So let me talk about maybe a few typical ones that we see when the business is just starting out and in the growth stage, right? Some of the good write-offs, and many times missed actually, are courses that you may take, some small, even consultations, even some small.
Yeah. I heard horses, and I'm like, sorry.
Courses, professional development, educational courses. Yes. some of those, for example. If they're a large amount, people usually don't miss it, but smaller amounts sometimes just skip their mind. They paid for it with something else, maybe before they even start the business, and they forgot all about it. And then when the time comes to prepare taxes, they need to bring those up, right? And many times we would have to ask, did you have any courses from before, or any kind of startup expenses before you started selling from prior years as well? Sometimes people take a year or two to even get the courage to finally list on Amazon something, anything. So basically, those are the expenses that you need to keep track of, and to make sure that you don't miss those. Now, let me see. Some office equipment, for example, is also a good write-off, like furniture. These are significant expenses that could be a significant amount of money, and you may have forgotten all about. By the time your office is set up and you're doing your taxes, all you're looking at is your sales and your current expenses, but you forgot about those, for example. So those are the ones. Also, any other office equipment, smaller office equipment, even printers, computers, label printer. Even when you buy a mouse, for example, or keyboard, these are all business write-offs. Now, some of these larger office equipments you may need to capitalize and then amortize over periods of time, but there are ways to deduct those right away. So it depends, of course, on your situation with your taxes to see which way is more advantageous for you to deduct those expenses as well. And one of the very good tax deductions is actually the accounting system setup. So this is something that we do in our firm. And this is also a very good investment for the businesses, and a business write-off too. So if you do the full accounting system setup, typically we recommend to do it in the first few months of your business, so that you know where you're at and where you're going. You can clearly see where you're headed and your future projections of your business profitability as well. Yeah, so these are basically the expenses that many people are not quite aware of, or let's say aware of, but maybe forget sometimes. Yeah.
We have another question from Warner. Which software is the best for e-commerce?
Okay, so this is one of the great questions. Yeah, so typically we use, as a backbone accounting software, we use QuickBooks Online or Xero. So, and one of the questions that we also had from before is alternatives to QuickBooks Online. So I was going to talk about Xero. So Xero is another software tool which is a great competitor to QuickBooks Online. It has great features as well, and sometimes even more user-friendly in certain ways than QuickBooks Online, but both of them have their advantages and disadvantages. So we have clients on QuickBooks Online and also on Xero, so half and half approximately, let's say. Also, in combination with that accounting software, we use integration tools. One of the most popular integration tools, and we use for almost every client, is A2X. A2X connects your accounting software to your seller platform. So marketplace, either let's say Amazon or eBay, Etsy, or Walmart, for example. They have a few connections with those, and it brings over the data, your sale data, into your accounting system in summarized fashion, and it would track your gross sales, your refunds, your reimbursements, any reserves on any funds that Amazon is holding, or eBay as well, actually, any carried balances. So it would, in the end, it would match to your payout in the bank, but it would have the full set of data that you would need, not only for tax purposes, but also for your internal analysis of your business performance on a monthly basis. It breaks down the data on month by month. If some settlements come in with 2 months, for example, covering 2 months, it would break it down for you. So it's great integration tool to use in combination with your accounting software. And on the side of the inventory, A2X also has the cost of goods sold feature built in, but it works well for those who don't have too many SKUs. So if you have a lot of SKUs, then you should have a separate software tool such as Inventory Lab, for example, or there are some alternatives to it, which we can get to. Yeah, so we can talk about that. Mm-hmm.
Well, we've got a couple questions in the chat here. I'm going to do Williams first since it's kind of on the same topic. What do you think of Godaddy bookkeeping?
Okay, so since we're live here on YouTube, sometimes I don't want to say anything about alternative softwares. All I can say, we are not using it. We are not using it, and if we do get clients who are already on Godaddy, we transition them to either QuickBooks Online or Xero, because those are the two softwares that support the e-commerce industry the most. It would provide the full set of data that you would need, including your inventory side. So Godaddy is very basic at this point. It works well for even though it does connect to the marketplaces, but it works well mostly for service businesses. It was developed for that. In my opinion, it's just not there where it needs to be for e-commerce business, for inventory-based business specifically. But it's price-wise, I think it's less expensive. So that's why many sellers who just start, they can start there. It's better than nothing. It's better than just sitting on Excel spreadsheets or just on your receipts, right?
Mm-hmm.
Better than nothing. Yeah. But
yeah, I kind of have that opinion too, that it's better than nothing. But once you get up and going, you're going to need something a little bit more robust. And then I have not looked into it, but I know there was a big breach, data breach with Godaddy. And you can Google that if you want to make sure. And I'm hoping, I think they messaged everybody who was part of the breach. At least I would think that they have to do that. But and there's data breaches with everything out there, so it's not Godaddy. I'm just saying that was in the news in the last couple of weeks that they had a major data breach. We've got another question here from Michael. I have just filed for a DBA doing business as, but it hasn't been filed yet. Can I get an EIN tax number now, or do I have to wait for it to be filed and registered?
So the IRS does allow you to select an option when you file for EIN, to select an option that my business will start. So you can technically request that EIN, or it's up to you. You can wait until it gets finalized, because it's no rush. If you just filed, it's beginning of 2022. You can set it up anytime. Yeah.
For me, I believe the big draw for getting an EIN was, I think that was the only thing that was majorly required when doing a business checking account.
Mm-hmm. Yeah. That's one of the things. One of the reasons. If you have a reason, then you can set up. But then on the other hand, you would still need to wait for that paperwork to come through, right? So
yeah, I want to say it was really quick, but that was a while ago too. Some things that were really quick pre-COVID are not so quick these days.
Yes, exactly. But getting EIN, you can get the same day pretty much if you do it online. Mm-hmm.
My partner Tina, who I love, asked, is there a recommended formula for how much you should take as an owner's draw? How does this affect the year in business taxes, if at all?
Mm-hmm. Yes, so it typically, there is no set formula, I would say. It depends on your business model too, on the business structure, business legal structure specifically. It's more strict with S corporations. of course, because S corporation is one of the most tax advantageous structures out there, and IRS wants to make sure that you are not taking advantage of it in a negative way, basically, for them. They still want you to pay the taxes that they reasonably think you need to pay, right? So you need to be on payroll if you're an S corporation, right? And at least a portion of your withdrawals have to be in a way in a form of salary, at least some of it. And yeah, we you're welcome to schedule. I know not Tina, but you're welcome. Whoever listens, welcome to schedule a call, and we can discuss your situation specifically for you, and maybe I can provide some range of what would be considered reasonable. But overall, it's just something that what IRS would consider reasonable to a regular person. And other business structures, it's not as strict as corporations, so I wouldn't worry about those much. Yeah.
Okay. And again, if you're watching, thanks for joining us. If you're watching the replay, thanks for watching the replay. And you can go ahead and leave a comment or question down in the comments. And if you're watching live, go ahead and pop your questions into chat, and we will, Julia will answer them. I'm just here for looks. We have some other things to talk about on our list. Let's see here. How long do you keep virtual or paper records? And we kind of already talked, and you suggested virtual records for a number of reasons, but how long do you keep records?
So typically, IRS recommends 7 years. They can go back about 6 years to request the additional documentation or even start an audit. If it's fraudulent, there is no limit. The time is unlimited, for example, if they consider some fraudulent. But generally, 6 to 7 years is sufficient to keep. So I would say 7 years is a good time period to keep those records. Some records, though, you need to keep longer than that. For example, your corporate formation documents or your business formation, right? Any depreciable property, for example, you're depreciating a computer, so you need to keep track of keep that documentation for at least additional 6 years by the time you finish the depreciating, because you still have to provide them documentation even though you purchased that computer much longer, more time.
I did not know that.
Yeah. So any lease agreements that you have, those you need to keep longer. So some very important document that results in tax benefit over multiple years, you need to keep longer. So the longer you keep them, just hold on to those, because you never know when they come up. And so those are typical. Okay. So that's.
Bailey, thank you for joining us. She's got 2 questions. First one is, how do we schedule a call, and how long do we have to file for LLCs?
Okay, so scheduling a call is very, very straightforward, very simple. My link is everywhere on my website, on Facebook, our Facebook page, on LinkedIn. So the easiest way is just to go on our website, allunitedcpa.com. And on that website, there is a link right there, get started, or you can go to contact and book a call. So just click on it, and there will be options of what kind of call you would like. We do free strategy calls, which typically brief, where we discuss you just briefly your business situation and see what are the best options to work together. We have consultation calls as well. We have some options also for international sellers who sometimes need some advice on the US legal structure as well. Yeah. So, and the second part of the question was,
how long do you have to file for LLCs?
Okay, so if you're asking about the formation of the LLC, typically it takes a couple of weeks to get the LLC set up. I mean, it depends on how quickly you provide the data and how quickly we can turn this around. But basically, no more than a couple of weeks to get everything set up. Yeah.
Okay. And she also asks, do you recommend switching an LLC to an S-corp, and at what point does that make sense to do that?
Okay, so typically, we assess a particular situation of the business in order to make that determination, because many businesses are growing, and maybe this year they were not yet to the point where they would be it would be beneficial for them to switch to S corporation, but they are projecting that the next year they will be, and you need to file for an S corporation election by March 15th of that year that you want it to take effect. So that's basically the period of time that to file. You can also file late elections, but the point of time where you could switch potentially to S corporation depends on where you're at in your business. So don't jump on it right away. That's I have a few situations where our clients, they did it themselves. They thought it's a good option, but it turned out to be too expensive and too many requirements for them for their small operations, and some waited too long to switch over to S corporation as well. And they ended up overpaying in taxes significantly. So I would say usually we start looking at SCorp, switching to S corporation approximately when your net income is between 20 and 40,000, somewhere in those lines, net income. But in order for you to determine that net income, you need to have a set of books that is accurate. All the adjustments are made for the year, so and you have correct projections for the next year. So it's just something that you need to we assess for every client individually, and then we make that decision.
And to clarify, she wanted to know, and correct me if I'm wrong, Bailey, if I'm getting this wrong, but I think she is asking, how long do you have to file for the LLC to file taxes on it?
Oh, okay. So if you're a single member LLC, then you have until April 15th to file those taxes, because single member LLC will go on your personal tax return. It will be a Schedule C on your personal tax return. If you are a multi-member LLC, then it becomes a little bit more complicated. With IRS, by default, IRS considers the multi-member LLC partnership. And partnership tax return is due on March 15th, 1 month before. And the penalties of late filing are very steep. It's, you can waive if it's only the first time that you're late, you can get that waiver from IRS, but the second time they will not forgive it anymore. So you just make sure that you work on it early enough for you to not to miss that deadline. You can also file for extension, which is 6 months extension to file that tax return. So of course it depends on your type of LLC that you have. Yeah.
Tina has a good question. What is the benefit of using a CPA versus TurboTax for business?
Oh, okay. So CPA, so TurboTax, you have to know what you're doing with taxes, at least approximately, get an idea. Even if you do a basic tax return, there are still some things that you may miss and you may file incorrectly. But if you're a business, TurboTax is probably only for accountants who know e-commerce accounting, even TurboTax itself. So the reason for you to go to a CPA versus TurboTax is not only CPA knows what to correctly put on your tax return, but also will help you save money on taxes. So instead of you filing incorrect tax return and missing deductions, you could file it correctly in the first place and save that money on taxes, right? If you did use TurboTax and it turns out that you filed it incorrectly, sometimes we see situations where, for example, clients file declare their income at net sales versus gross sales, for example. It happened a few times. You would get a notice from IRS, and that notice will either inform you that your tax return needs to be, you need to pay additional taxes, or you need to refile your tax return. And basically, they will attach some kind of dollar bill to this, some kind of a bill to your notice. So you don't want to wait until that time to come. So do it the right way in the first place. That's our best advice. If it happened that you already filed, before you receive that notice from IRS, don't wait. Just if you know that something may be wrong, have another set of eyes look at it. And if the amendment needs to be filed, that's totally okay. It's better to file amendment before you receive that letter, because then you don't have to fight with IRS and try to get those penalties and interest removed. And IRS, it's a process to deal with them after that. So yeah, so that's something that it comes up a lot actually in our situation. Yeah. Mm-hmm.
So the last on our pre-discussed topics was explaining the cash versus accrual basis operating. And I wanted to just kind of get a general overview of this, because I see it a lot in Facebook, people asking questions, and it comes down to kind of, there's two different ways to do your books, and so you're going to get two different answers. Mm-hmm. And so then you get a lot of confusion on the Facebook groups and forums and whatnot. So if you would explain that to everybody.
Okay, so it is a complicated topic, no question. So I will give just a brief overview, but if you want to learn more, of course, this is it's more of accounting topic than then it's not always easy to grasp right away. So I'll just explain the basics. So on cash basis accounting, you get to claim your expenses on a cash basis, so as you pay for them, and income as you receive that income. And on accrual basis is when you get your income, you report your income when you earn it, and your expenses follow your income, where you need to sometimes amortize those expenses. If you prepay, for example, you cannot necessarily claim when you paid for that expense, but in the future when that expense is actually applied. So let me explain a little bit more in terms of cash basis for specifically e-commerce. So there are a few misconceptions here. People think that if they did not receive their payout in the bank, let's say December payout in the bank, they don't have to claim that income. But the fact is that the income is already received. The customer already paid you for it in December. So you do need to claim that income. Even if you didn't receive the money yet until January, you still need, specifically for e-commerce, right? You still need to claim that income in that year. So on cash basis, still on cash basis, right? Now, same with inventory. There is a misconception. The inventory, when you, many people think that when you buy inventory on cash basis, you're able to write it off right away. That's not the case. That's not what cash basis accounting is for. So you need to, you can deduct your inventory when you sell it. So when you buy the inventory, you capitalize it and it becomes inventory asset, right? You write it off when you have that sale, when that inventory gets sold, right? So in order for you to during the year, if you wanted to keep your books on cash basis, so you can write off that inventory so all the purchases that you make throughout the year, you can write it off until the end of the year. But at the end of the year, you still need to reverse that inventory, unsold inventory, put it back on your books, put it back in the inventory asset account. Even on cash basis, you still need to put that back on as unsold inventory. So many people think that if they spend as much money as possible in December on inventory, they can write it all off and reduce their tax bill. No, you cannot write off the inventory until you sell it, even on cash basis. So that's the general rule, cash basis for e-commerce accounting. For expenses, however, cash basis accounting is more flexible because you can pay for that expense and write it off that same year, compared to the accrual basis, where some of these expenses you may be prepaying and you cannot write off right away on accrual basis. For example, you prepay for your insurance, right? For the full year business insurance, and you prepaid for it. You prepaid in December. And on cash basis, you can write it off in full in December because you paid for it. So cash basis works when you pay for it, right? On accrual basis, you have to amortize that insurance over the period of time that it's effective for, let's say, 12 months. So you would amortize it on a monthly basis. So you can only write off 1 month of that insurance for that, or if you are on accrual basis. So, and most of the sellers actually use some kind of modified version of between cash and accrual basis. And we determine, typically when we work with the clients, we determine which method or the combination of these two methods we would use for their situation, because some of the expenses, for example, are recurring, and if they're recurring, there is no need for accrual basis. So sometimes it's just the expense is very similar month to month, and we would do it to simplify things, because it's not always it's sometimes it's more time consuming and more complicated to run it on accrual basis. But for larger sellers, we always recommend accrual basis, and that typically is the most useful method for your accounting. Yeah.
Well, thank you, because that's I think the main takeaway here is just to know that there's two different ways. Mm-hmm. So when you're then looking at things and having that question, you know that there could be two different answers on how people might answer you. So we've got a couple of news topics. Just think that would be good to talk about here. And I'm going to put a link to the source down here. But this has been all over the news for the last couple of weeks that there's a new tax rule that is now requiring PayPal, Venmo, any Cash App. In fact, I got one notice from raise.com, which I use for discounted gift cards sometimes, that pretty much any businesses making more than $600, they now have to report it to the IRS. And I have heard, especially service-based industries, having a fit over this. I guess there were some photographers, pretty much, I know like massage therapists, hairdressers, photographers do a lot of business through Venmo. And now they're going to have to report that income. So, or some sort of reporting. So what could you tell us about this and how it's going to affect e-commerce?
Okay, so first of all, I can explain why this happened in the first place, why IRS decided to enforce, to change this rule. So previously, when a business is paying their contractor, for example, they're obligated to issue them a 1099 if they paid them more than $600. And not everybody was following that rule, first of all. Right? Even if they pay with check or wire transfers, this was not enforced, widely enforced. Obviously, if you didn't issue a 1099, unless you get audited, most likely it was just, staying under the table, basically. And IRS, understands that it was one of the loopholes, basically, to get some of the income unreported. And if somebody was paying their contractors through PayPal, for example, right, one of those payment processors, then they didn't have to issue 1099 to them at all, because PayPal is supposed to take care of it, right? So PayPal is supposed to issue them a 1099-K or whatever form PayPal is responsible for. But PayPal only had to issue that form if the seller or the receiver of that money received $20,000 or more throughout the year, or had 200 transactions. So many who did not meet that threshold, many of those people who got paid, so they did not declare that income, and IRS knows that, but they cannot do anything about it because there was no 1099 reported to them. There was no information reported to them in terms of how much they actually made. Some of those people actually did it unintentionally, not reported that income unintentionally. Let's say they made 19,000, they didn't meet that threshold, but and they were under impression that they didn't have to. If they didn't receive a 1099, that means they didn't have to report that income. And I get a lot of those calls where people ask this type of questions, and I'm asking, okay, so you've been selling on, you've been doing some business, and it's not on your tax return. They say, I didn't have to. So, and I explained that you did have to. It's just IRS didn't know about it. So now IRS is closing up that loophole. In fact, anybody who is self-employed or single member LLC, I'm not talking about any more complex tax structures, but business structures. But for those who are self-employed or single member LLC, you have to report if your net earnings are $400 or more, you have to report it on your Schedule C. So $400, this is a really small net earnings that you need to have. That is already makes it reportable to the IRS. So the rule is not new. The rule is just being enforced now, and many are upset about it because they used to keep that income to themselves, and now the IRS will know, and they have to report it regardless, because otherwise, you'll receive a notice for sure. So that's one of the things that will affect the e-commerce businesses, of course.
For sure.
Yeah.
And do you think is there any way to are they just kind of starting this is blank going forward, or are they going to go after?
No, so it seems like they're starting it from 2022. So the 2021 year is still not affected, but doesn't mean that you don't have to file, don't have to report that income that you received. You have to, that requirement had been around for years. It's just was not enforced as much as it's going to be enforced now with this new regulation. Yeah.
So we've got another question from Bailey here. You mentioned that single member LLCs file on your personal tax return. 4 months in 2021, I work a W-2 job. Do I need to wait till I get the W-2 before scheduling a call with you?
So typically, it depends on how early you want to start. You can schedule a call. We can get some introduction going, and we can send the tax organizer. So we typically work with the tax clients. We typically have the tax portal where we securely exchange documentation. So you can get started on it if you'd like. Now, can we start working on your taxes? Probably we would wait until you have all the documents in, or at least most of the documents. But you feel free to schedule a call if you'd like to get started. The sooner we start, the better. So get it done and over with, right?
Yeah, and I'm starting to collect all my stuff, rounding it up, and there's just some that I just dread doing. I don't know why. It's not really that bad.
It's not the best, but we try to make it as smooth as possible.
Yeah. So we have one other news article here. So this is kind of your last call for anybody that has questions. Go ahead and pop the question in the chat. We do try to keep these interviews to just about an hour. So this one is about the IRS Letter 6419 and why does it matter before you file taxes. And I believe I got these. These are like my first documents I got in last week. But if you could just speak a little bit to what is this about and how is it going to affect your taxes?
Yes, so this is actually an advance payment for your child tax credit that you should be receiving if you have children. The tax form, the letter that you're going to receive, 6419, is supposed to cover the months from July through December, the advanced payment, that the 50% of the total child tax credit that you're supposed to be receiving on your 2021 tax return, right? So the second part, the remaining 50%, will be claimed with your tax return, on your tax return. But in order for us to report the correct amount that you already received, we would need to also have that letter as part of your tax documentation so that we can put the right information. So it's supposed to add up to all the payments that you received from July through December. Like I said, it's $300 per child under 6 years old, and $250 per child 6 and over. So these are basically the information. And starting 2022, it looks like it's going to stop for now. And this law just ended, and hopefully maybe they in the legislature they can extend that. They're working on it right now, so they're still in discussions to extend it to 2022 potentially, or make it more permanent. So that's something that has been just temporary. And there is another letter actually that you're supposed to be receiving, not only related to child tax credit, but another letter 6475. And that is related to your third stimulus payment that you received in March of 2021, around that time. So some people received it a little bit later, but that's another letter that you can expect. So the child tax credit letter is going out right now. People are receiving it right now. So typically, if you married, file, and joint, you will receive, each one of you and your spouse will receive that letter, showing just half of the amount received for each. And then you would have to provide both of those letters to your tax preparer in order to claim the correct amount for the advanced tax child tax credit payment. Mm-hmm.
Well, thank you for coming on, and I'm gonna add these really quick again. If you want to find Julia, you can find her at her website right here, All United CPA. There are links down below if you'd like to just click the link down below. I don't know, are you still honoring a discount, or was that for the other one?
Yes, absolutely. 10% off Reseller Mom 10. That's the discount code that you can use. Just mention this discount code, or that you saw the interview with Reseller Mom, and we'll honor that discount absolutely.
I also highly suggest going and following Julia over on her Facebook page. That way, she does videos as well. I'm sure you can find her YouTube. I didn't grab that real quick, but you can find her on YouTube as well. But she has does little snippet videos that are helpful and usually really like up current. This is what's going on now. And that was kind of how I found Julia, because I had CPAs before, and I'd go in and I interviewed them because we did TurboTax for years, and then it got a little complicated. So I went in, I interviewed a CPA, told them what I'm doing Amazon, and I get this, oh yeah, we know everything about e-commerce. And then they're like, they didn't know anything about it, and they're trying to have me pull everything, and I had to basically do all of the work and hand them a completed paperwork. And I had no idea, really what I was doing. I'm like, I think I'm pulling the right inventory. And I'd ask them, is this how I pull the inventory the report? And they're like, well, you own that business. You should know how to do it. And I'm going, wait a minute. So then I interviewed another person, and I got the same, oh yeah, I know everything about e-commerce. And I'd ask some very technical questions, and they would have no clue. But I just flagged myself for a personal question. Like, I got a new roof this year. Can I write off part of my new roof as a business expense? And that's a very, unique question that I can go to Julia and ask her in an email, or, when we do our monthly meetings on those types of things. So it is just a wealth of information, because I'm telling you, if you try to Google that one, you're going to get all sorts of answers, because everybody's situation is unique. So I really love having somebody that's kind of on my team and knows what they're doing and knows how to play the game, especially when it comes to taxes, because there's a lot of rules. There's a lot of laws going on with it. And in the e-commerce business, it has changed significantly over the last 10 years on just everything, how you report things, how you do things, where sales taxes are. I mean, boy, we could talk forever on just sales tax changes.
Oh, yeah.
Ridiculous the amount of changes it's had. But thank you, everybody, for joining me today.
Thank you for having me.
And again, if you had any questions, go ahead and leave them down below, or you can direct them directly.
In January. You know what it is, right?
What in the heck?
A bill, I'm sure. From all the things.
Oh my gosh. I guess I paused it too long. All of a sudden, one of the videos started going off. But thank you guys for joining me. Don't forget to give this video a thumbs up. It helps out my channel. Take care, everybody.
Thank you. Bye-bye. Bye, everybody.